All right. So, anyway, first of all, good morning. Tom Bachrach, PFH Capital. Just want to reiterate what Neil said about Ian and Mike and everyone else at MicroCapClub. They do so much work, and we all contribute so little and benefit from everything they do. And very grateful for that and happy to be here. I'm just going to do some really quick background on PFH Capital, so we can get on to the idea. So we're a long-only investment partnership. We aim to build an unlevered portfolio of our best, 10 to 20 ideas, 90% of the time. Plus, we're talking publicly traded equities. We operate with a flexible mindset. We like our deep value, our commodity plays, or things like that. But our ideal long-term holdings usually have, strong insider alignment, solid financial health, the potential to reinvest earnings at a high growth, earnings and growth at a high rate of return. And of course, we want to pay as little as possible, well below our measurement of intrinsic value if possible. Now, it turns out, of course, it's hard to find high quality businesses selling for well below intrinsic value. They are rare. So where possible, we just try to hunt where there's less competition. Obviously, I'm speaking at a MicroCap summit, so nano MicroCaps, too illiquid for large fund peers. They are obviously a major place we hunt. We also like to hunt kind of off the beaten path. We have global custody in 100 markets. We like to go to markets which are can be inaccessible to small fund peers due to custody challenges, things like that. When we combine the two, it's actually our favorite. For example, we have a couple MicroCap investments in Egypt, where I used to live. When we can combine both microcaps and off the beaten path markets, we believe we're competing with fewer smart investing peers and perhaps getting a better price. So I just want to jump right in the idea here. So Spyrosoft is in Poland. We would argue it would be classified as GARPy, as in growth at a reasonable price. Trades a little over $30,000 USD per day. Has a stable share count. There's an incentive plan that's going to tick the figure up by about 5% by 2026, so call it 1% a year. Market cap's about $74 million USD. I'm converting it there as of this morning. Enterprise value is a little less. They don't have, essentially have zero debt. They're net cash. It's trading about 16 times my estimated run rate earnings. And in terms of alignment, the insiders, including co-founder, CEO, Konrad Weiska, own a lot of shares. And actually, and they don't pay themselves much at all. Collectively, the market value of their equity exceeded their compensation by over 1,000 times in 2021. I would call that very strong alignment. So, what do they do? They do outsource software development. You would be familiar with kind of larger peers like, EPAM Systems, Luxoft, Cognizant, Infosys, people like that. Essentially businesses have a certain need. They need to develop, implement a given software solution, and they can hire people like Spyrosoft to do so. The game ultimately for Spyrosoft is kind of an arbitrage. You retain talented programs, ideally in low-cost jurisdictions. You sell their services to customers, ideally in high-cost jurisdictions. So, the performance to date is really been incredible since they were founded in 2016. You see revenue growth, CAGR 106% per year. They've averaged 96% return on equity. They were tagged Europe's fastest growing tech business by Financial Times in 2021. The interesting thing is they actually still are quite small, which is why I'm presenting them at a MicroCap summit. Revenues run rates about 50 million. Their market is estimated by their peer EPAM as probably about 150 billion. So they have really a lot of room to grow. Just to talk about a couple of these measures, these numbers are pretty big. I would expect, obviously ROE would come down with growth. It was 54% last quarter, which is still, very high, but it's not realistic to grow 96% a year forever. The high growth also necessitates kind of working capital reinvestment. So the free cash flow conversion has really been depressed to date. But unlike ROE, we actually should expect that to increase as growth moderates a bit. And there are recent signs it is. Free cash flow conversion was 80% last quarter, for example. I just got through in a quote at the bottom. I think it relates to their success to date. I'll read it. It's from their CEO, Conrad. So he said, we decided, it was in response to a question about innovation. And he said, we decided not to be very innovative. The sad reality is that if you're innovative, then you need to educate the market. And education of the market takes time, and in most cases is a failure. We just decided to do things slightly better than the competition, which we knew very well. And they know them very well because they came from them. I find, when people produce performance and don't feel the need to attach a save the world story to it, I find that refreshing today. So, in terms of kind of the keys to success, obviously the first one really comes from just simply basing themselves in Poland. They're really not the first business to generate strong returns on capital from software development in Poland. There are quite a few who've done that. Essentially, you have a high number of high quality technical universities which are pushing out a huge labor talent pool in Poland, but cost of living still remains relatively low compared to the U.S. and Western Europe. English proficiency is very high there, which is good for outsourcing. And of course, Poland shares a time zone with much of Europe. They're only about an hour off from the UK. They're the same as Germany, France. And by the way, I just want to say, actually, I'm looking over my other screen over here. It's not just people are cheaper there; they're actually pretty much about the best coders you'll find in the world. I'm looking at HackerRank, which is they rank across a bunch of developer challenges, and they have China #1, Russia 2, and Poland 3 most recently. And I would venture to guess Russia, after some of the exodus we're seeing right now in the programming community, is probably going to slip behind Poland soon enough. I'll add one more thing on Poland. Anecdotally, I can confirm Polish labor productivity is a real thing. Our only analyst at PPH Capital is from Poland. He's based in Poland. I'm going to give a shout out to him. He's Marcin Kramer. He's currently on the call here. Just to give a little example of what you get when you outsource to Poland. I asked him to do a little scuttlebutt on Spyrosoft and figured he'd chat to 3 or 4 people. I think the latest figure was 40 last time I checked. So long story short, don't bet against Polish work ethic. Obviously, though, there's more of a business than just basing yourself in Poland. Really, employees are critical. They're extremely customer facing. They're deeply embedded in the customer's operations. You really need to afford them a necessary degree of independence from corporate management. Good employees, they attract and retain good customers, and it's truly works in the opposite direction as well. Retaining good employees is about having good customers, good projects. Thus, it's really vital to set the right culture to attract those good employees. That's really where you push on the flywheel in this business. You don't do that with cheap gimmicks either. If you listen to an interview with Spyrosoft CEO, he basically says the right culture is one, hyper engineer focused. They basically try to make sure everyone there, including the receptionist, has an IT background or experience in some way. And you have to follow a very decentralized model. I included a few quotes on the slide to kind of that effect. The quote on the organizational structure, where he talks about having the engineers on top and him, the CEO, being a support role. Anyone can say that, but it's backed by deed. He paid himself 60,000 Polish zloty. This base salary. That's about $15,000. So he's backing that by deed. Regarding decentralized structure, I just want to highlight also that the top business unit management, who's functioning pretty independently, they can receive stakes in their subsidiaries, which is seen as non-controlling interest in the financials. and that kind of can, that's used to retain entrepreneurial-minded employees who may otherwise go out and form their own business and compete with Spyrosoft, and also just further increase shareholder alignment. So you have to you can't just put up some quotes and say, okay, yeah, they have a good culture. You have to try your best to really evaluate it. Our best idea of how to do that was just to reach out to a ton of people, talk to a lot of current and former employees, try to gauge employee satisfaction. So out of the 15 we spoke with, I should say Marcin spoke with, my Polish is non-existent, 13 were positive and 2 were negative. The negative ones weren't overly concerning. One related to a lower level manager. The other one related to a guy who's since left the company. We heard nothing but positive comments about CEO Conrad Weiska, the culture he's setting. We think he's gotten it right. And I want to add something else. It's just as a side note, when you're talking to a lot of people, it became really clear during that process that it's hard to get a job at Spyrosoft, and also it's also kind of hard to get a raise at Spyrosoft, and that's kind of a pleasant surprise to hear in an industry where labor scarcity really could be the major challenge. So good sign they're doing something right. They put out a strategic plan for kind of a 5-year plan, taking them through the end of 2026. It's they're targeting about 25 to 35% annual revenue growth. That's ambitious, but it's not really crazy for a company that's been doing over 100% the last 4 years. And I think they did 69% the most recent quarter. And remember, of course, they're $50 million revenue in a $150 billion industry. There's going to be some headwinds on that growth. The one I'd highlight first and foremost is just the macro growth outlook in Europe could not be more terrible. You got an energy crisis, inflation issues, but there's also tailwinds. Some of their major competitors are in Russia and Belarus, and they're getting squeezed out of the market pretty actively as we speak. That could be huge for Spyrosoft. That could be a lot of growth right there. So if I take the midpoint of the revenue growth guidance, which I don't think is overly aggressive, I take their EBITDA margins guidance, which are frankly probably overly conservative. I basically back into a situation where their EPS is compounding 24% a year the next 5 years. So that's a 24% return in the next 5 years if they don't, get any kind of revaluation or multiple. Here's the thing: they're aiming for a foreign exchange listing in 2027. So I would say that if they accomplish that and they accomplish that in this kind of growth, I would sincerely doubt that they're going to be valued 16 times. And if they go to the London, U.S. market, something like that. So that would add accordingly the 24% per annum return. So through some risk here. I'm not trying to get every risk on the slide, but I want to put a few that kind of really stick out to me and that put some concern in the back of my mind. First one's on customer concentration. They last disclosed the data on that in 2020. It was in a prospectus. We believe it's come down since. We think it's closer to 10 to 15% for the top 2 customers each, 20 to 30% collectively. But we've requested that management, disclose this, quarterly, annually, whatever. But begin disclosing this again. Hopefully that happens. But in the end of the day, that's clearly a risk, and we seek to mitigate that risk at PFH in part through position sizing and just trying to be a little bit conservative with our growth assumptions. On the second item, well over 80% of their headcount's in Poland. That's actually their advantage right now, but that a short-term advantage can become a long-term risk. And I think it is a long-term risk. They're selling to places like the UK and Germany. They're selling in pounds and euros. And, if the Polish economy outperforms Western Europe's, we should expect its labor costs to go up, its currency maybe to outpace those currencies. And, it would ultimately make them a little bit less competitive on a cost basis. Just on that last item, insiders own 85%. That's also a good thing. but it's a good thing until it's a bad thing, and it's a bad thing if they ever decide to mistreat us minority shareholders. No indications of that based on how they compensate themselves, based on how they performed. They have a clear exit strategy here in 2027. But we're along for the ride, so that's a risk to keep in mind. And this is a disclosure. I'm sure Ian doesn't want me to read through this, and I won't. You're all welcome to come back and pause it and read it if you enjoy this sort of stuff later. So let me just move on to Q&A.